Excellent. So everyone's here. Thank you for attending. Today's webinar is on the advantages of trading Darwin DWC versus other listed assets on the exchange. In terms of prerequisites, it is assumed that you have knowledge of the DWC asset. Now, this could be in the form of you having traded or invested in the DWC asset before, or you've been following our blog posts and webinars that have been conducted recently, and you are familiar with the workings of the asset. So knowledge of the asset is a definite plus to follow the contents of this webinar. Secondly, it's assumed that you have some understanding or more of volatility and mean reversion, and lastly, that you understand range and retracement trading. In terms of agenda, we'll do a brief recap, a very brief recap on the underlying fundamentals of the DWC as well as the key differences between the DWC and other assets on the exchange. This will be a very concise wrap-up sort of recap, as we've discussed this at length in previous webinars, as well as blog posts that have all been published recently. So if you do struggle with any concepts to do with the DWC, it's highly encouraged that you go to our YouTube channel and watch some of the recordings on the DWC that were delivered in the past, as well as multiple blog posts on blog.darwinx.com. Moving on from that, we'll discuss the advantages of trading DWC versus other assets on the Darwin exchange, and indeed even trading instruments such as currency pairs later on towards the end of the webinar. We'll categorize these advantages in terms of return, risk, and the suitability of the DWC as a trading instrument on its own. We'll conclude with a Q&A session where I encourage you to ask all the questions that you will hopefully keep for the end of the webinar so we can get through this content efficiently. And I'd love for you to ask those questions towards the end so we can dedicate you some answers. In advance, I apologize for a slightly croaky voice as I have a sore throat. So anywhere in between, if my voice blurs out, I will be right back. So moving on, beginning with a brief recap on the DWC. In terms of its underlying fundamentals, if you followed previous content to do with blogs, published on blogs, as well as discussed in recent webinars, you'll know that DWC trades the opposite of asymmetric exposure in the DarwinX community, and this asymmetric exposure is the byproduct of loss-averse practices, particularly during strong market trends. Now, such behavior by definition is cyclical in nature, and that cyclical behavior tends to find its way into the DWC's returns, as you'll see as we continue in this presentation, that the DWC exhibits mean reversion in line with the cyclical nature of the behaviors that it models. Moving on to the key differences between the DWC and other assets listed on the exchange, DWC analyzes a large number of community participants' behaviors, and this is markedly different to any other Darwin on the exchange, where it is the Darwin provider's decisions that power the Darwin that affect its movements, or it is the Darwin provider's set of algorithms or algorithm that powers the Darwin. So the key difference to note here is that the DWC analyzes a large cohort of people, whereas individual Darwins that are not non-DWC Darwins tend to follow the advice of the Darwin provider's timing, as well as any algorithms that the Darwin provider may be executing on the underlying strategy. DWC, unlike other Darwins on the exchange, also simultaneously trades a large number of currency pairs at any given time, and this too is different to a majority of other listed Darwins on the exchange, as most Darwins tend to trade 2 to 3 assets at any given time. Just need to hold for one moment. Thank you, I'm back. So that was a difference that needed pointing out, that while the DWC simultaneously trades a large number of currency pairs at any given time, that in comparison to the majority of other listed assets on the exchange, where that number of currency pairs are not in execution simultaneously. Moving on to so before I continue the next section, this contributes towards this behavior, the cyclical nature, the fact that DWC simultaneously executes a large number of trades on multiple currency pairs, trades on a large number of currency pairs, All of this contributes towards DWC's investment attributes, returns, and risk profile having a naturally higher level of statistical significance compared to other assets on the exchange. And all of these advantages that we're going to discuss today, they are for both active as well as passive investors, as you'll soon find out as we go through each component of this presentation. Now, advantages of the DWC versus other listed assets. We'll start with the category of return, where we'll discuss the range-bound cyclical behavior of the DWC in brief but comprehensive detail. Now, this advantage in particular is as follows. DWC's returns demonstrate a fair degree of mean reversion. And these returns therefore fluctuate in a stable range. This particular behavior, this mean reverting behavior, it not only does it persist on the main time frame where we all immediately see when we get to the platform, that is the daily or the annual data or biannual data, this mean reverting behavior persists across all time frames, and therefore it lends itself, it makes it approachable as a tradable asset for short, medium, and long-term traders alike. So there's no subject of, well, is it intraday, is it swing, is it long-term? The mean reverting nature exhibiting itself across multiple time frames, small and large, makes it a tradable asset for traders of all types, be they short-term or long-term. Now, based on currently available data, DWC also passes several statistical tests for the presence of mean reversion. I won't bore you with the details of those tests in this presentation, but if you are interested in reading into that detail, please visit the link that's displayed on this slide here in the presentation. If it's hard to read or hard to copy, then you can go to Google and search for DWC mean reversion tests, or you can visit the DarwinX blog on blog.darwinx.com and search for DWC mean reversion tests, which should land you on the blog post in question. In that blog post, we've conducted several statistical tests, standard statistical tests that test a time series for the presence of mean reversion. I'm sure you'll find it quite interesting. Active traders, going back to the discussion of benefits for active and passive traders, active traders can trade DWC as a standalone asset if they wish, as a result of all these behaviors in the DWC. They can design strategies around the asset approaching its historical peaks and troughs and exploit its mean reverting tendencies. Passive traders too can leverage the mean reverting tendency to perhaps time portfolio allocations, for example, or decide on an appropriate point in the DWC cycle to make an allocation and how much of the allocation to make based on where the DWC is at this point in time in its return cycle. Let's see how this looks on the platform. I will switch my screen to the DarwinX platform, where we will observe the DWC Darwin. Firstly, in terms of return risk, the first screen you see, the first tab, the return risk tab, allows us to see this mean reverting tendency in action. I'm just going to refresh the screen here very quickly to give us an idea of what this looks like. On the return risk graph, it's immediately apparent that since inception, the DWC tends to has moved in a stable range, firstly, and secondly, it respects a historical resistance and support over time. This behavior, this mean reverting tendency and the stable movement within a reasonably defined range is apparent on multiple time frames. So if we go a little deeper, say into the 6-month time frame, you'll notice that even though the mean of the series may shift over time, DWC tends to respect that mean for an extended period of time. This tendency can therefore be exploited by both active and passive traders, designing mean reverting strategies around the DWC, or in the particular case of passive traders, using this mean reverting tendency to decide on appropriate allocations given where the DWC is in its return cycle at this point in time. The second section that I'd like to show you is if we scroll over to underlying strategy. I'd like to show you the relationship between returns, open trades, and leverage, which carries a fair degree of predictive value if you are looking at the DWC, analyzing the DWC. So the first thing you'll notice is that when looking at the open trades graph, you'll notice that as the number of open trades in the DWC decline, the probability of a large swing in favor of the DWC dramatically increases over time, particularly when the level of open trades declines to historic lows. You'll notice over the course of the DWC's tenure that this support level, so to speak, borrowed from terminology borrowed from the technical analysis world, this support level tends to be respected over time. And as the number of open trades declines, the probability of a large growth cycle in the DWC correspondingly increases. The second part of this relationship to observe is deleverage. Whereas sharp increases in deleverage when the open trades are not at their lowest, it can signal the end of an ongoing growth cycle in the DWC. Whereas counter to that, if we observe a sharp decline or a decline in deleverage corresponding to a decline in open trades to historic levels, that may well add more confirmation to the fact that an impending growth cycle in the DWC may be around the corner. So deleverage, open trades, and returns analyzed in this way provide a lot of predictive value for both traders and investors of any capacity, be they active or passive. Let's switch back to the presentation now and move on to the next slide. Just a moment. Right, we're back on the screen. So if you'd like more information on this particular subject, range-bound cyclical behavior in the DWC, we have covered it numerous times in past webinars as well as on blog posts on the DarwinX blog. So please visit our first and second webinars on the DWC and the effects of market volatility on trader performance to study more on range-bound cyclical behavior in the DWC. And there's also a blog post titled Hedging Darwin Portfolio Risk with DWC on blog.darwinx.com. Moving on to the second category of advantages that we're discussing today, it would be risk, and that is that DWC has a fairly stable volatility profile. Now, earlier on I said that the DWC trades a large number of currency pairs simultaneously. The effect of trading a large number of currency pairs simultaneously is that a combined portfolio of currency pairs results in individual assets in this portfolio, in this basket, effectively cancelling out each other's excess volatility. Excuse me. So the stable volatility of this basket is as a result of individual assets cancelling each other's excess volatility out. Add that to the mean reverting tendency of the DWC, and it makes it a strong candidate, therefore, for range trading, where you need both of those things. And in range trading, you need a fairly mean reverting asset to be able to exploit that tendency, the mean reverting tendency. And secondly, you would prefer having stable volatility as opposed to a volatility that's too high or too low. And in terms of the number of currency pairs, let's quickly go back to the platform to see this asset allocation on the Darwin DWC's listing itself. For this, we will need to proceed to the Assets and Timeframes tab. And here you can see that over time, the composition of currency pairs that the DWC has traded over time. And from the odd CHF, odd CAD, Euro CAD, CAD CHF, etc., you'll notice that regardless of the time frame, let's scroll down to a lower time frame, you will see that this basket of currency pairs persists across all time frames. So at any given time, the DWC is engaged in trading a large basket of currency pairs, which therefore provides the stability and volatility that we've just been talking about. Switching back to the presentation and proceeding to the next category of advantage that we've been talking about, DWC's suitability as a trading instrument. So far we've discussed benefits in terms of returns, the range-bound cyclical behavior of the DWC. We've then gone on to talk about the stable volatility, the reason behind the stability and volatility experienced by the DWC. And now we're going to quickly refer to its suitability as a trading instrument and what that means. Active traders, we've observed in the Darwin X community, frequently engage in trading ranges and short-term retracements. Now, this behavior is impacted negatively, quite adversely, in fact, during deep market movements in currency pairs. And it's one of the reasons that range and retracement trading practices are quite hard to exploit in live trading. Traders who are typically looking for small moves, anticipating retracements, can get burnt very quickly if there are very deep, very quick movements or prolonged deep market movements over time that don't happen quickly but do happen. They tend to alter the profile of returns that a range or retracement strategy has been exhibiting during good times. So one of the reasons that range and retracement trading becomes hard to exploit is as a result of this particular market tendency, especially for beginners. So where DWC comes in is that its stable volatility means that very large, deep movements will not happen immediately, will not happen during very short periods of time due to its stable nature. Secondly, its mean reverting tendency over time has demonstrated that when it shifts to new means, it tends to respect those means for extended periods of time. Both these features of stable volatility and mean reverting tendency make it a suitable alternative, therefore, to, say, volatile currency pairs, particularly for traders with mechanical trading strategies, that they may be, for instance, mechanically trading an asset over a certain range of price. They may be scaling in and out based on various criteria beyond the scope of this discussion. The idea, the point being made here is that couple DWC's stable volatility, its mean reverting tendency over time, this is a more approachable asset as compared to, say, a currency pair where volatility is not going to be as stable as the DWC's, and mean reverting tendency will also not be in existence like in the DWC. So suitability as a trading instrument, particularly for beginners, highlights itself through those two features. And that is our brief but comprehensive webinar, hopefully, on the advantages of trading DWC versus other assets on the exchange, as well as trading instruments, as we discussed towards the end of the webinar, where we described how if you have a mechanical trading strategy, or if you're a beginner trader looking to engage in mean reversion or range retracement trading, DWC is a more approachable asset compared to other assets that you may be embarking upon.